Hi there guys, this is Chris Coney speaking and welcome back. In this lesson, we are going to label each one of the 5 areas of the exchange trading screen. Now this begins the process of seeing the logical relationships between everything you see in front of you, which is another step closer to that crypto exchange mastery. So here I am on Binance in advanced mode, and my trained eye sees 5 distinct elements here, which are: Number 1, the order form. Number 2, the order book. Number 3, the order history. Number 4, the price chart. And number 5, the trading log. While it might not be obvious based on the layout of this screen, these elements stack on top of each other in a very logical structure. In fact, everything you see here is based on one single thing: the price, right? Either in the past, present, or future. That will make more sense later. Now, the order form is one of the interactive elements. This functions like any other regular order form you might use in the real world. You fill it out with what you would like to order, and then you submit it for processing. And there are 2 sides of the order form. One side you fill out if you are buying the base asset, and one side if you are selling the base asset. Now on the buy side, you'll be spending the terms asset, which in this case is dollars, and on the sell side you will be receiving the terms asset. The interface on Binance, it has these reminders, but not all exchange screens are this well designed. They don't have all these little clues. So that's why I mentioned it in the way that I did. Next, we have the order book. This is where orders go when you place them. In this case, these are all Binance users that have placed buy and sell orders on the BTC USD market, and they're all waiting for their orders to be fulfilled. Once an order is fulfilled, that trade is then recorded in element number 3, which is the trade history or the order history. Sometimes the order book may be changing while the trade history remains the same. Well, why is that? Well, because once you've placed an order on the order book, you have the right to cancel it before it's fulfilled. So that's what's constantly happening. And it's what you see the order book dancing around. That's why you see the order book dancing around. People are constantly placing orders, cancelling them, placing new orders, cancelling them, adjusting them, and so on. We don't actually know who these people are, and we don't need to know. All we know is that they are Binance users or users of the exchange that you're on, and they want to trade this pair one way or another. So the trade history only updates when an order is fulfilled. So how does that happen? Well, that question brings us to the most basic reason why exchanges exist in the first place. The purpose of an exchange is to match buyers and sellers who want to trade the same assets at the same price. Right? And an exchange might add a whole load of other bells and whistles, but fundamentally this is their purpose: to match buyers and sellers. So if you place an order to buy 1 BTC at a price of $3,800, and then I place a sell order for 1 BTC at a price of $3,800, well, the exchange then transfers ownership of the Bitcoin to you and ownership of the $3,800 to me. A new entry is then made in the trade history, so everyone else knows that the price has changed. That's actually the only way that the price does change. The price is the last time that 2 people agreed to exchange the 2 assets and a trade took place. So the price is actually the last price that the asset was traded at. As soon as the next trade goes through, though, the price updates, but it doesn't necessarily change the price. If the next 2 people come along and trade, say, half a Bitcoin for a price of $3,800 per Bitcoin, well, then the last price remains the same because the price is still agreed at $3,800 a Bitcoin. Even though a trade went through, the trade history updates, but the price doesn't move. So an exchange is essentially one huge, never-ending auction. Right? The buyers, they are placing bids, they are bidding for the assets, and they're declaring that the price they were willing to buy at, and the sellers are placing what are called asks, because they are asking for a certain amount of money before they will sell. When the exchange system finds a buy and a sell at the same price, a trade is executed. If not, then orders just keep coming in until there is a match. We'll get more into all this stuff later. So number 4 element is the price chart. This is basically a visual representation of the trade history. Drawing a price history as a chart makes it so much easier to see what happened in the past and spot patterns, as compared to the trade history, which is just horrible to look at, and it's almost impossible to derive anything meaningful from just a list of numbers. We'll definitely get more into the price chart later on. And element number 5 is your personal log, where you get like a mini version of the trade history, which only displays your personal trades that went through. It also keeps a log of your orders separately, so you can see all the orders that you placed, including the ones that you cancelled. We'll break this down in its own lesson as well. So there you have it. In just a few short minutes, we've completely demystified the trading interface into 5 simple elements. Now all we need to do is take each one of these elements in turn and add some detail so we know how to use each one. But that's all for this lesson. So until the next one, it's me, Chris Coney, saying bye for now.